Welcome to the August 27th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. For the most part, we try to keep it very simple. We have price, volume, a few moving averages on price, a 10, 20, 50, and 200, and then one moving average on volume, the 50, and then we have a relative strength line. And that's it. As usual, we're going to run through a few broad market averages, then cover open positions in the model portfolio, and finally we'll take a look at what's out there in terms of new setups. So first up is the NASDAQ Composite, which after 4 solid days up in a row and a pause on Wednesday, it pulled back in on Thursday. I mean, that's to be expected after a sharp run up here. And maybe we can expect something along the lines of the pullback in late July, a nice surge up and then some chop here at above the 20. And, whether this is more of a bull flag sideways action or a pullback to the 20, we don't know. And there could possibly be even a deeper correction to the 50. So no predictions here, just taking it day by day. Looking at the S&P 500, pretty much the same thing here. Looks like it's entered pullback mode. Whether that pullback finds support at the 10-day or 20-day EMA, we'll have to see. IWP, which is Russell Mid-Cap Growth ETF, a proxy for how growth is acting. Like the NASDAQ Composite, a pretty sharp run up and just needs to pause for a bit here. Still above the 20-day EMA on the hourly. So possibly just a little bit more chop, allowing for the rising 10-day EMA to catch up. We'll have to see. So right now the big question is, can the relative strength in growth stocks continue? They've had a pretty good run over the past 5 days, but the current market rally certainly lacks the power that it had earlier in May and June on that move out. Some of the more liquid growth names struggled on Thursday. In the model portfolio, AMD sold off 1%, which wasn't too bad, on a slight pickup in volume, still above the 10-day EMA or right at the 10-day EMA. We'll have to see if it can hold above this intraday reversal around 106.75 and reclaim the 20 EMA on the hourly. That would be a positive sign. Shop down 2.4% on lighter volume. We're looking for support around 1500 to hold here. D-Dog, ugly reversal day here off the highs. We have a stop just a bit lower at 129.77 for the ad and a little bit lower than that for the initial 5% position. Snap broke down below the 20-day EMA on a pickup in volume. Not a good sign. Our stop is a little bit lower here at 70.29. And we're looking for the price to remain above the 20-day EMA on a closing basis. And ZIM, which this chart is not correct here. So here's a chart of ZIM on TradingView. We have a breakout. We added about 1%, 2% higher. And then there's this ugly reversal here off the highs, which we would have preferred the price to hold above Wednesday's close on Thursday and chop around a bit. Second best scenario is for the price action to hold Wednesday's low minus some change. It didn't do that. We did stop out of half the position at 47.40. There is support from the 5-day EMA here. The 10 EMA is at 45.66. And our stop is just below the 10 EMA, which is about 6% from our average entry price. As for stocks that could be in play on Friday, that's if the broad market averages do not continue to sell off. First up would be GLBE on a break of this downtrend line and a move through Thursday's high. Bullish reversal candle there, reclaim the 20-day EMA. And on the hourly chart, you see the hourly downtrend line break, So move through this 70-18 area is the trigger. TAC broke out to new highs on heavy volume, has pulled back in on declining volume the past 2 days. Trying to find support right around the 20 period EMA on the hourly. If it can get back above the 20, say this 84.20 range, it could be back in play for a swing. ZI continues to find resistance at 64, but this is certainly a stock to watch, especially if it pulls back into the 20-day EMA and reverses off the average. Since the current rally has failed to impress, overall it seems like trying to enter closer to the 20 at support is a much better idea than attempting to buy the breakout above 64. LC, and this is a stock that was a breakaway gap up on big volume, and here's the breakaway gap on huge volume. Followed through to the upside, but the past few weeks has stalled, hasn't made much progress above 29. Bottom just shy of the 20-day EMA last week, and we're probably better off looking for some sort of reversal to develop around the 20 EMA tomorrow or next week. SONO, interesting. It's about a 30% deep cup, and then this handle is about 15% deep, so it's a sloppy handle. But if we focus on the rally just off the 20-day EMA, it's a nice 16% move. Has this little mini cup with handle look. So if the price action can chop around above this 39.50 area, could see some sort of bull flag develop. And this is what it looks like on the hourly. So look for the price action to break this downtrend line, possibly undercut the 20 EMA on the hourly, and then reverse back up for an entry. So our stops are in place. We'll have to see what holds and then go from there. While the week did start off promising, the lack of follow through in several names on our watch lists and open positions is cause for concern. And we'll just have to see how they hold up tomorrow and early next week. That's a wrap for tonight's video. Thank you for joining me, and we'll see you again next week.